Once again, my name is Gene Kent. I'm with United Benefits for Postal and Federal Employees. We only work with postal and federal employees. We advise them on their life insurance and their disability. And I'm going to talk to you about disability today. As you know, the federal government does not provide any disability benefits other than your annual leave and your sick leave. And once you use that up, you're on your own. We provide a disability policy, and I'm going to go over that with you. Your protection is good, 24 hours a day, 7 days a week, 12 months out of the year. We pay in addition to your annual leave and your sick leave, so we don't care if you have a bunch of it or none of it, we'll pay in addition to it. The benefits go directly to you. They do not go to your doctor, your hospital, or your provider. And you do not have to be in the hospital or even confined at home to receive your benefits, and the money comes into you income tax free. Now you can take out any amount that you want to, from a $600 a month benefit up to a $2,000 a month benefit. We cover you for accidents, we cover you for sickness. That's the only way that you become disabled. You can't become disabled any other way other than through an accident or sickness, and we have you covered on both. Let's assume that you have a $2,000 a month benefit and you got hurt on the job, and if you were to collect workman's comp, we would pay a 50% of that benefit, or $1,000. However, if you got hurt on the job and didn't collect workman's comp, and there's many reasons why you wouldn't, it's always a fight, as you know, then we would pay the full benefit of $2,000. Maternity would be covered as any other illness. You can keep this if you leave the federal government. There's one rate for all ages and one rate for male and female. Now let me talk to you about what is not covered. Any mental or nervous condition, if you become disabled as a result of alcoholism or drug addiction, if you became disabled committing a felony, or if you're to try to commit suicide, don't get the job done, become disabled as a result, if you're to pilot an aircraft or drive race cars or fight in the war. So those are the things that are not covered. Now we have two elimination periods. You choose one of the two. We have a 14-day and a 30-day. And what that means is that if you had a 14-day elimination period, you'd have to be disabled for 14 days before the insurance would even start to kick in. Now the longer the elimination period, the lower the cost. So like I said earlier, you can take out any amount that you want to, from a $600 a month benefit up to a $2,000 a month benefit. And if you were to take out, I'm going to give you one example, if you were to take out a $1,000 a month benefit that's paid over a 1-year period of time per disability with a 14-day elimination period, the cost is $27 per pay period, and I'm leaving the pennies off for now. Now let me talk to you about these premiums. The insurance company has the right to increase those premiums. However, if they did, they'd have to increase it for everybody in your state. They could not single you out. They'd have to get permission from the Division of Insurance in the state that you're in, and they'd have to give you 30 days advance notice before they did so. The final thing I want to talk to you about is pre-existing conditions and how they treat pre-existing conditions. A pre-existing condition is any condition that you would have seen your doctor for in the last 12 months. Now they don't care what happens to you 2 years ago or 5 years ago, just in the last 12 months. So if you've seen a doctor for any reason in the last 12 months, that's a pre-existing condition. If you prescribed any medication for you in the last 12 months, that's a pre-existing condition. Or if you're on medication now, that's a pre-existing condition. That pre-existing condition would not be covered then for the next 12 months or a year from now. Thereafter, it'd be picked up, no questions asked. Everything else is picked up from day one. Pre-existing conditions are picked up at the end of 12 months, no questions asked. Even though you may be treated in that pre-existing condition over the next 12 months, it's just 12 months from the time you take out the policy that pre-existing condition would be picked up, no questions asked. Let me ask you a question. If you were to become disabled, how long could you go without receiving any money coming into your household? In other words, what I'm asking you, what is best for you, a 14-day or a 30-day elimination period?
14.
Let me give you an example just to make sure we're on the same page. Let's assume that you have a disability that lasts for 4 months, which is 120 days. And if you have a 14-day elimination period, we know the first 14 days are on you, right?
Correct.
Your insurance would kick in on day 15. You'd receive your first check on day 45 because they're always paying you in the arrears. They cannot pay in advance because they have no idea how long you're going to be disabled. So any elimination period that you choose, you're going to get your first check 30 days after that elimination period. However, the 14-day elimination period has an extra benefit in it that 30-day does not have. And the benefit is this. is if you were to go in the hospital as a result of a sickness only, not as a result of an accident, you're there for a minimum of 24 hours, not as an inpatient, not as an outpatient or same-day surgery, but as an inpatient, you'd have no elimination period at all. If you don't go in the hospital as a result of a sickness, you still have that 14-day elimination period, or you still have it for the accident as well. Now, let me ask you another question. If you were to become disabled, from a $600 a month benefit up to a $2,000 a month benefit, how much would you need coming into your household per month?
1,000.
The final thing I want to discuss with you, there's a one-year benefit. Let me explain to you how that works. Let's assume that you broke your left arm. You've gone through your elimination period of whatever you chose. Your doctor's the key to this whole thing, because you never go to the insurance company's doctor, it's always your doctor, says that you cannot go back to work for the next year, and I'm just using that as an example. So you've been collecting $1,000 a month for 1 year. At the end of that period of time, you're able to go back to work. You're back to work for 6 months and you re-break your left arm again. Your 1 year benefit would start all over again. Likewise, if you were to be back to work for 1 day and break your right arm, that's a new disability, your 1 year benefit would start all over again, because they pay you per disability. However, if you have a disability where you never go back to work, that's as long as they're going to pay is that 1 year period of time. And the reason is it normally takes 6 months to a year to collect Social Security disability.